Alright everybody, welcome back for another one. And as I mentioned in my last video, I was going to bring you a video on how to hedge a potential downturn coming in the market to end the year. Alright, the market is starting to gear back up, starting to look bullish. You know, as we get more and more euphoric, right, as we close with a parabolic move, as I think is coming, people are going to once again lose sight of how quickly this market can dump. All right, so if you were here in April, May, June, July, all that, you got to see how quickly this market can turn sour and all those gains that you thought you had just evaporate, right? So anyway, I'm gonna cover two different options you have, which is just going short on the market, or how to use options trading to also hedge a downturn. Okay, so the platform I will be using if and when we get this market dump in December, and I say that because we have had literally two major cycles in Bitcoin so far. On the back end of a halving, Bitcoin has peaked in December and took roughly 1 year to complete a bear market. All right, peak in December, and then in 2013-14 top, we had the bottom put in January the following year, and then in 2017 the peak was in December and the bottom came in the following December. So you can plan ahead for potentially an entire year of bear market, or you can just lose money and be bitter at the market. Anyway, so Prime XBT, this is the platform I'm going to be using for my shorts. All right, the cool thing about it is they offer multiple different asset classes. So whatever you're into, they have options to trade. All right, so cryptocurrency being one of them. They have Bitcoin, Ethereum, Litecoin, and EOS. For some reason, EOS of all things. But the two that I will be trading will be Bitcoin and Ethereum. Most likely, probably only Ethereum, just because I think that the price might drop percentage-wise even more than Bitcoin. All right, Bitcoin usually has like a 85% pullback in bear markets, somewhere between there. But the altcoins usually do 90, 95, sometimes 97, 99. You know, they usually lose more money on the downside. All right, another option they have is Forex. All right, I don't trade Forex, but if this is something that you are familiar with, then here you go. This could be a new platform for you to trade on. All right. They also offer commodities, and the only one I might have interest in, at least for the time being, would be gold, but they also have the UK Brent, US crude oil, and US natural gas. Gold will be, if I trade gold, it will most likely be in the I Trust Capital account that I have. All right, I'm fairly confident that the bull market is over and we're going to enter an entire year of bear market. I think gold might be a safe backdoor over there in the I Trust Capital because they offer gold and silver. They say it's physical. Who knows? I don't believe in really owning gold unless you actually own it physically. But nonetheless, if you're just trying to protect your portfolio value, it could be a good trade. All right. And looking at the gold chart, the chart is saying almost the same thing as well. All right. We had the top put in summer last year, a little over 2,000. Been struggling in this range for a while, but it looks like we're crossing over the moving averages right now, and we might be getting a golden cross soon on the gold chart as well. So we'll see if that happens, but I think gold could be a really easy place to park money while you wait for a bear market crash, because it also has upside potential, right? With everything going on in the world right now and inflation and everything, might not hurt to consider. All right, last but not least, they have indices as well. The Germany 30, S&P 500, NASDAQ 100, and the Hong Kong 50. And this could be useful for you if you also own stocks. Say you own the S&P 500 and you think that the market might be about to dump, but you don't want to exit your positions, then you could just go short on it as well, and that would be allowing you to hedge your downside instead of just realizing losses. All right. Let's look at the Bitcoin chart. The top put it in 2017, and I will show you one quick example of how people might use a 3 moving average strategy to know when to get in and out of the market on a downturn. All right, so what people might do, this is the 50, 100, and 200 day simple moving average. You could be looking at this for confirmation that the market is going to dump. All right, I'm sure most of the professional traders out there are watching this euphoric rise and knew that a top was coming. All right, so the top came in around mid-December and consolidated for about a month. But as soon as you lose close below the 50-day moving average, people might typically, professional traders might be using a 3 moving average strategy to exit their position right here. All right, but they're not going short yet. All right, so typically using this strategy, you would go short after you close below the 100. All right, so as soon as you got this close below, now you're short. All right, and obviously you stay watching the market and everything. Look for any signs that this might be about to reverse, but ultimately now you would be in your short and making money on the way down. And Bitcoin continued to struggle with the moving averages as resistance along this entire path. There was literally no signs that you should be getting back into the market. So hypothetically speaking, said person, professional trader, could have been in this market on a short for a 70% loss of the ride. All right, depending on how much leverage you use, could have made a lot of money in there. All right. Prime XBT offers up to 100 times the leverage, I believe, but I would not recommend trying that at all, especially if you're new to this. But I'm bringing this to you right now because I think that you should definitely consider playing around with it, trying to get comfortable, use a very low amount of money so that whenever the time does come, you're not just sitting there with no plan, no idea what to do, and you're just going to accept the losses. All right, that's not the best strategy. So, but anyway, you would have been in the market riding that down for 70% drop, and your signal to get out of your short would be closing above the 50. All right, so this person would have closed their position right there. Now they have no positions, and you wouldn't go long until you break above the 100 and close above that as well. So now your signal to get out was very clear. Get out here. All right, made some money, congratulations. And then your signal to get back in came right here. As you can see right now, all of these signals were profitable, but it just takes time and patience and also some conviction to actually believe in what you're doing. All right, but anyway, oops, just a second. Said person could have been using this strategy the whole time as well. Their sell signal would have came in here. All right, their buy would have came back over in here, as you can see, and so on. But anyway, that's just one example of how to go short and use some indicators to do so. All right, the next one is going to be options. So what I will be looking at is trading Riot options. All right, you can buy, that's because you can buy these on any of the major platforms, your Schwab, Fidelity, Robinhood also has it as well if you're using that platform. But anyway, looking over here at Riot, I could see Riot finishing the year at least up in the $200-300 range. Would not be surprised at all, especially with Bitcoin going parabolic. If it can get up over 100,000, Riot is going to be flying. All right. If you didn't know about Riot, it was 50 cents back in the panic sell-off of 2020. All right, so 50 cents all the way up to $75. It was one of the best returning things you could have had over that period of time in crypto, besides maybe Cardano, right? And even then, the returns were about the same from top to bottom. But anyway, when the top comes in and Bitcoin starts dumping, these mining shares are no doubt going to dump worse. All right. So, like I said, Bitcoin down 85% from the top, something like that. You can expect Riot to do something more like 90, or so. We'll see, right? But let's go back. So in 2017, the top put in for Bitcoin and Riot took Riot down all the way to the bottom, 99%, almost 98%. So you see what I mean? A lot of money to be made if you're positioned correctly on the downside for these. All right. So how do you do options? Simply put, so let's say that this top came in, I'm going to do some simple math, right? Top comes in at 269 since we have that here, and let's say it drops 90%. We'll have it come down to exactly 90% loss, which would take us back down to $25. Now, if you're buying put options, what that really means is that gives you the option to sell at a specific price. So you're probably not going to time the top perfect and get the best contract ever. But let's say you did for the purpose of this educational video. So anyway, your contract allows you to sell Riot at $269 and it falls all the way down to 25. So hypothetically speaking, you would be able to have $244 of profit per share, and each options contract is typically going to be 100 shares. So that contract would have netted you $24,000 profit minus, right? Keep in mind, minus the premium you had to pay to buy the contract, right? So whenever you go to make this purchase, I don't have this exact option I'm using as an example, but let's just show you, right? So the most expensive one right now is going to allow you to sell your Riot at $115. And that contract alone would cost you $8,500. All right. So you can see you're not going to get exactly the difference between the shares, right? But reality is, simply put, options allow you to buy at market, and put options allow you to buy the shares at market price and sell to whoever owns the contract at whatever price was given. And as we used in the example, Guy wrote a $269 strike price option contract. All right. So those are two ways to do it. Another way to do it is you can also sell calls. All right. If you're selling a call option, that just generates income. That's all that selling options in general are for. All right. If someone is selling an option, that means that they're on the opposite end of what they think is going to happen, right? Say you're bullish, they're bearish, they'll sell you a call option because they don't think that the price is going to go any higher, all right? But if you're bearish and they're bullish, then they would sell you a put because you want the option to sell at said price, but they think that the price is going to go a lot higher. So collectively, unless you want to lose money on the way down, you're going to have to learn how to use either options or sell short, simply put, or just flip from one asset class to another. A lot of people do that as well. So it's totally up to you. Multiple strategies you can use, including staying in your positions, right? So to keep it simple, say you've been buying and holding Bitcoin this whole time. Once you think that the top is in, you can continue to hold the Bitcoin you have so not to incur any short-term capital gains or losses. You can stay in that long-term bracket by not exiting your position. And then you can also sell short on a platform like this, all right, on Prime XPT. That's one way people would do it. Also, say you're staking away. Say you got XRP and Flare has launched now and you're staking your XRP on there for some returns and you're accumulating more and you don't really care about the market price because you're looking 4 years down the road. All right, you can keep those positions and then also sell short on another side. While you might not make profit by doing that, you're hedging the downside, if that makes sense. All right, so if you want to always be in profit, then you need to be completely exiting your positions and going short. But if you're just interested in hedging the downside, you can stay on both sides of the table. All right. So those are just a few options. I'm sure that you're probably a little confused watching this very brief video. I mostly wanted to spark some interest in you to learn on your own, do some research on how to actually use these strategies in more detail. All right, I can make some more videos down the road on this if you guys would like, but ultimately this is the route I'll be taking. All right, and like I said, I'm probably going to, if and when I think the market's rolling over, be shorting Ethereum on Prime XBT. I also might use Riot options on Charles Schwab as well as Robinhood. So definitely check those out if you have interest. I know it's a short video, kind of not much detail, but you know, ultimately just trying to point you in the right direction. All right, that should do it for today. Hope that was informative. As always, please like and subscribe, share with your friends and family, and stay tuned for the next one. Thanks.
NFT.